Good morning and welcome back to Almus Market Mornings. It seems my job to provide an introduction for this podcast has become quite tricky. Every time I wake up, there are different updates floating around for tariffs. This is also a reflection of what investors and traders across the world must be feeling. Such updates make it quite tricky to navigate the markets. JK, if I zoom out, the dollar weakness theme has continued. This is amid the escalating trade wars, skirmishes between Canada and US over retaliation, and the possible peace deal which Ukraine seems willing to enter into once again. How are you seeing all of these themes playing out?
Yeah, good morning, Swaraj. Yes, so what you say about the updates being, uh, uh, kind of very uncertain and don't know whether what we update now is going to be relevant in the next 1 hour or no. So actually, it's a fast and furious movie in real life with Trump being the hero. That's how I'm seeing it. If you look at yesterday, what happened, there's so much of back and forth movement in the tariff news, particularly between US and Canada. There is no real clarity on what is the final thing that is emerging. President said he would double the tariffs on all imported Canadian steel and aluminum tariff to 50%. And after some time, they said that these will take. This will not be immediate. The order is actually not immediately signed, and it will take some time to go into effect. And then Canada, on their part, also said they had imposed a 25% charge surcharge on export of electricity to some of the key states in the US. And later on, they also said that it was being withdrawn. Trump has then said he was now looking at reducing tariffs on Canada. So we don't know what is the picture that is emerging. Of course, the Canadian dollar was whipsawed also throughout the session. That's one area of tariff that is not really clear. At least other Mexico, China, and Europe, we're not seeing so much of news about it. Also, when you talk about the currency, if you look at it, it has been an emergence of European optimism versus the emergence of US pessimism that is driving the dollar and, in fact, the broader financial markets as well. European stocks have relatively outperformed the US counterparts in this month, and their yields have been up while those in the US have been drifting down. There's a big shift of, uh, the situation of US exceptionalism versus the sickly Europe that we have observed for over the last 1 year. Now, in fact, if you look at the US in 85 basis points of easing as against some indications over a month back that even calling by the Fed because the tariffs are going to increase the inflation, and therefore Fed will have to be cautious. So this is the shift that we have seen, and that is actually supporting the euro as well as keeping the overall dollar sentiment somewhat weaker. In yesterday's session, we also had the stocks putting up a mixed performance. Nasdaq was down and then recovered. S&P 500 was whipsawed both sides. It went into the correction territory of below 10% from the peak, but then came up, and Dow, of course, ended on the negative side. Dow is perhaps more impacted by the tariff news and all that. So this has put the investors in a spot about what they should do next on their portfolio. So I think this volatility is continuing on the markets. On the economic side, we did have the JOLTS data, which was a slightly positive surprise. Job openings had increased. The quit rate had also increased, which means there was confidence among the employees in getting new jobs. But then there is a rider to it. It's a backward-looking data. It is 1 month older than the BLS employment data that we saw last week. So don't give too much of importance. As we said yesterday, also the full impact of the Trump's policies on layoffs, government spending cuts, and all that would be, not fully represented in the data so far. It will probably be reflected from the data for this month onwards. Therefore, market did not really react positively to these numbers. Uh, And of course, the market will be more closely looking at the CPI number that is expected to be published today. Most of the parameters, month on month and year on year, are expected to show a lower CPI number. Now, again, in view of the impending tariff decisions, whether the market will really react to a lower CPI number or not, I have my own doubts. In any case, what I have seen in the at least in the stock market, is that most of the markets have now fallen about 10% from their peak, which means they have completed minimum correction. Maybe a time to pause in these conditions, in these levels, but I think we need some trigger for them to also bounce back. One positive news that we got yesterday was Zelensky agreeing to a 30 days ceasefire with the US, and then of course we are awaiting what reaction we'll get from Russia. But that was seen as a positive factor in yesterday's trading. So overall, the dollar has been weakening, as I said, due to increasing optimism about Europe and U.S. economy seeing some sort of a pessimism. But it has moved quite a bit. The euro is at a very strong resistance near 1.0950 to 1.10. On the dollar index, 10330 is a very big Fibonacci level where it could find some good support and see a bounce and wait for more economic news supporting the trend. Therefore, I see some stalling in the euro rally as well as the dollar index falling. And of course, the emerging market currencies might pick up a bit if there is better news on the tariff, but it is really something that we cannot be sure about, because the data shows so far that we have seen one of the largest outflows from emerging markets from the global FI investments. So it may take some more time even for the emerging market currencies to pick up from their steep losses. As far as the rupee is concerned, it was a better day. Gaining almost 20 paisa during the day, erasing part of its losses of the previous day, helped by initially central bank intervention, and later on some inflows were also heard. We also had a better sentiment driven by Asian currency strength after the Chinese yuan rallied. Besides, the dollar index weakening also added to some sort of a positive sentiment for the rupee. But for rupee, it has been a yo-yo during the month. Now we are seeing up and down, and mostly the weakness has been more steeper than the strength, because the market is still not very confident about the rupee strength despite the overall dollar weakness. Therefore, that takes some time into gaining traction. And of course, the flows being negative, even yesterday FI flows were negative of over 2,400 crores. Therefore, we are seeing the demand supply situation is still of the demand, forcing the central bank to come in at key levels to curb speculative excesses. However, slightly encouraging for the exporters is that the premiums have now gone up by about 15 paisa compared to the low, and in terms of percentage, it has gone up by 0.15%, which is probably an incentive for the exporters looking to sell for the year end, and with spot ruling around 87 20 30, I think that may be one factor that could see the cap at 87.50 continuing. But we also await the inflation number from India today, which is expected to further soften towards 4%. Thank you.
Thank you, JK. I'm just quickly summarizing for Europe. It seems the currency theme is emergence of euro optimism and US pessimism. EU yields and stocks are higher, while US stocks and yields are lower. US stocks were whipsawed both sides yesterday due to the tariff-related updates. When it comes to data, we have the US CPI data. It's expected to be slightly lower. We also have the Indian CPI, which is also expected to be a little softer. For rupee, it was a better day. It gained 20 paisa due to central bank intervention and the Asian currency strength we witnessed due to the global weak dollar. So, and moreover, adding to that, there was a slight rise in forward premiums, which should be encouraging the exporters. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.